As traders, what we're doing most of the time is just processing information and making decisions based on that information. I know that we display things a lot of the time graphically in like charts, candlestick charts and so on, but in the end all it's giving us is information which we have to digest, process and have an outcome which is a decision based on that information. And a decision is always either to open or close a trade or just to do nothing at all. But here's the thing. Although our minds are amazingly powerful and can process so much information in one go, we also have our limitations and we can also make things easier or more difficult for ourselves. And what I mean by this is that they include too much information in one go, try to process too much, and it's like trying to multitask a million different things at once and you're never going to get the best outcome as a result of that. Just think of a computer, right? When you have millions and millions of different applications open at once, loads of tabs on your internet browser, suddenly things slow down. You don't get the same outcome that you were hoping for. You don't get the same efficiency, you don't get the same power. Basically, you don't get that same quality output. And we're exactly the same. I want to talk in this video about a few different steps you can take. In fact, I'm going to give you 4 different methods to reduce the amount of information noise that you're going to be taking in, to reduce the amount of stimulus that you have to sort of process in one go, so you can make sure that you get the most efficient outcome, use your mind in the most productive way, reduce the amount of decision fatigue that you encounter, and actually have a much better trading life. Something that we all want in the end, to make our life easier and not more difficult. So I'm not going to talk about reducing the amount of indicators and stuff like that because that's a given. I always say that we want to keep things simple and logical. I want to talk about now when the candles on the chart themselves are clustered and a bit of a mess. Like you can see on your screen now, you see where you can tell that the market is moving in some sort of range, but you can't see where the highs and lows are in the market. You can't really tell what's happening. The movement's sometimes too small and clustered, then it becomes a bit of a confusing mess. So even when you're at your A game, you can sometimes look at a chart when it's like this and think to yourself, okay, where do I start? What's this market even trying to tell me right now? So let's break it down, okay? On the chart, what we want to look for if we want to identify a trend are new highs and new lows and that kind of thing, right? We want to know where the peaks and the valleys are in the market. But in a market like the one I just showed you, that could be a little bit difficult to pick up. So the first little tip that I would use is to use a zigzag indicator, which is free, okay? You can find it, it's downloaded in an MT4 and MT5 software download site, whatever it was called. You know, the link's downstairs in the description box just so you can check that out for yourselves. But there's a code base there and there you can find the zigzag indicator for free, and download it and include it in your chart. And when you switch it on, it's going to look like this. And what you can see here now is that the zigzag indicator, although sometimes not perfectly accurate, it helps you to pick out those peaks and troughs, the highs and lows in the market, so you can then determine what direction the market is generally going. If you're getting higher highs, you can tell by the zigzag indicator creating higher points on the chart. You can even use this to help you draw trend lines and things like that. I often use it to help me pick out, you know, the ranges, to use my Fibonacci retracements and extensions then. But just as a starting point, from that I'll then look at the candles specifically and find the wicks and bodies that will make up the range itself. But this just helps me to identify the highs and lows in the markets. It creates a nice wave effect and you can see it much more clearly. So on the chart that I showed you before, which is a mess, if we look at that now, you can see that there's some highs and lows in the market, which are like here and here. But also now you can see that the movements in the market are contracting, which means that although they're still in the previous ranges, they're just getting smaller and narrower. So you can tell that something is happening, like there's less conviction in the market and it's possibly building up to a bigger move. But essentially though, we're using this zigzag indicator to remove the noise and focus on what the broad movements are in the market. Because for everything, this is our starting point. You don't jump straight in and identify candle patterns and jump into a trade. You know, we're not doing Japanese candlestick charting methods and stuff like that where, you know, you have 3 bullish candles in a row and jump into a trade and all that kind of nonsense. We want to know where the structure is in the market so we can understand where the key levels are. So the broad picture we look at first before zooming in and looking at individual candles and stuff like that. So the next thing is quite similar. It's that we want to know, broadly speaking, what direction the trend's going in, because this is going to matter. If we're going against the trend, we're probably going to be opening probe trades or opening less position size than if we're going with the trend. So you want to know, broadly speaking, what direction the trend's going in. So for this, I like to use a moving average. Just one, sometimes maybe 2 or 3, just to help me out in a particularly difficult situation. But what the moving average is going to do is going to smooth through all of the noise, so all of the peaks and troughs that might get a bit confusing if I can't see the higher highs and higher lows, or I'm not looking at that in that particular way at that time, I can use the moving average to smooth things out. But for this, I don't want to use a fast EMA like the one I usually use, which is a 14-point EMA, so exponential moving average, because that's the one that I use for as a significant level, so I'm looking for it attracting and repelling the price. In this situation, I want to use something that's more of a medium or longer term moving average, something maybe like a 50-point standard simple moving average or a 100-point one, just so I can see the smoothed out trajectory of the market and see whether things are heading up or down. You can take a look at that and identify at quite an easy level, like just a snapshot, what direction the market's going in, broadly speaking. And you can even then compare this across different time frames. So of course you have your dominant time frame, you can look at a couple above and a couple below. So if you're trading 15-minute charts, you might want to look at 1 hour and daily and that kind of thing, just to see overall what direction the market's going in. This can then help you to get through all of the noise clutter on the charts and understand what the time horizon of your trade should be based on the trends overall. Now, one thing I don't do, but a lot of people do use this strategy, is to use moving average crossovers. I get a lot of questions about this all the time, whether moving average crossover strategies are useful, whether they are actually going to work in the market. And generally speaking, I don't think they work as a strategy per se, but I might use them to try and understand if there's a change in trend direction. Obviously you can tell if the lower time frames are changing before the higher ones, it may lead to a knock-on effect of the higher ones changing direction afterwards. But this is not a signal to enter a trade, it's just something that helps understand the overall picture of the market. Just the same way that you would use like fundamental information to understand whether the euro's due to go up or down, or like the strength of an economy. I use the same kind of thing with the moving averages and understanding crossovers in that way. So I'm not using them for trading, I'm using them to remove the noise on the charts. So the next thing is something I use to help me try and, it's kind of similar to picking out the highs and lows in the market, something I use to try and pick out the ranges that I'm going to focus on for the trading. So understanding where there's swing low points, swing high points, where the significant ones are that are more significant than others, so the stronger swing highs and lows in the market. And that's to switch from the candlestick chart down to a line chart and to plot the points on the charts before then switching up to a candlestick chart again to find the precise point by using candle bodies and candle wicks. Because of course the thing about a line chart is that it's only taking the data points when the candle closes, so you don't get the broad range of information you get from a candle where you see the highs, the lows, the open, the close. Those are important bits of information for when you're actually trading, but just to remove the noise, because sometimes the wicks and candle bodies all over the place can cause a bit of a clutter that gets a bit distracting or a bit too much to process at sometimes, especially as you get through towards the end of the day and your decision fatigue's taking its toll and you just want to smooth things out and just to understand broadly where the market's going. So I use a line chart for this, just to smooth out the movements of the chart so I can clearly see, okay, this is where the market's going, these are the high and low points, these are the top points of the day, this is where there's significance, where the market keeps struggling, and then switch back to a candlestick chart and find the precise points there. And just finally now the fourth point, and this one's kind of an obvious one, but a lot of people don't follow this, and that's to remove anything from your chart that's not useful at that moment in time. So you've seen from my Sunday analysis, at that point at the start of the week, I'm looking at significant levels based on a daily chart or a weekly chart, and I'm drawing these levels onto the charts themselves, which I'm going to be trading that week. But if you're drawing a trend line from, say, a weekly chart or Fibonacci retracement or a Fibonacci range on a weekly chart, or even a daily chart, you don't necessarily need that on your chart all the time, because maybe there'll be one or two of those significant levels that will come into play during the day. So you can kind of remember it. You don't need to have it on the chart all the time, because as you go down to your working time frame, so like a 5-minute chart or a 15-minute chart, maybe a 1 hour, when you start drawing the levels and the lines on those charts, it can get confusing when you have also the levels from your weekly and your daily. And sometimes when you're switching between time frames, then it can become a bit of a muddle in your mind, like which lines are which. Even if you change the colors and stuff, it's just giving yourself more stimulus that you have to really process, and you have no idea how much this can slow down your efficiency and your speed of making decisions, and also increasing your decision fatigue. So anything that I don't need at that precise moment in time, I'll remove from my chart, or maybe open it on a separate chart just so I have it, so I can go back to it and don't have to draw those lines again and again, or take a screenshot and keep it in Evernote. But at the moment in time that I'm opening trades and really making decisions about where to open a trade, I don't need the lines from previous days. I need what's important in the market around where the price is at that moment in time, and that's all. And that counts also for other objects like you know, if you're doing reversal zones and stuff like that. If you do a reversal zone on a daily chart, then when you switch down to a 5-minute chart, your entire chart is just going to be the color of that block of reversal zone. So that's going to get really confusing. So you want to remove the reversal zones, understand that you're inside one, but get rid of it and just focus on the working time frame that you're focused on. So you don't need to have everything on your chart all the time. Sure, it looks nice to have all these levels and understanding that you've done the analysis before, make you feel good about yourself, like you know what you're doing, but it's just going to get confusing. It's going to look like a mess. You want to keep things as basic as you can, as boring as you can on your chart. You know, the more simple you can make it, the easier your life's going to be when you're making trading decisions. And just as a bonus, by the way, when you're talking about noise, you can also talk about background noise and having distractions around you. So having the TV on, even if it's Bloomberg or CNBC or something like that, having the radio, music, you know, you've got to figure out what's going to be distracting for you. And that includes other people. When people are trying to talk to you, or there's noise in the background, someone having an argument, you know, people playing outside your house if you're trading from home, this kind of thing can also add more distractions. It's more things that you're having to take in and process, more information. Sometimes it's good to just block it all out. And sometimes if things are particularly noisy and I need to focus, I'll put on the big noise cancelling headphones and then just put something really simple on it, like white noise, like the sound of a fan. That I'll find a video on YouTube that has that kind of noise, and it might be a bit strange at first, but you get used to it, and it means that you can really focus in then, because you take away one set of stimulus that's distracting you and just focus on what you're seeing on the chart. So you just got to find what you can do to remove noise, keep the amount of things that you're having to process down to a bare minimum, and that way you can really focus on exactly what you're doing. Remember to write things down, take notes throughout the day, because it stops you having to remember things all the time, which also means that you're saving your mind power for the important parts. So taking notes is always a good thing. You know, I've always been one of these types of people that think they can remember everything, remember dates, remember appointments, remember all kinds of things that need to be done, like my to-do list. I remember it all on my mind. But once you start writing these things down, even if you can remember them all, once you start taking notes and writing these things down, it just clears up that whole mess in your mind and lets you focus on the important things and be a lot more efficient and quick to make decisions and quick to act. And that's what's important in trading. So guys, I really hope you take these points on board and implement them with your trading. You know, it's one of these things where you just have to get into the habit of doing these things, just to declutter your mind, declutter your workstation as well, declutter your life. Remember, if you like the video, give us a thumbs up so I know which of the videos you're preferring so I can do more of that. If you want more videos about learning to trade, hit that subscribe button. We've got 3 to 5 videos coming every week, including my Sunday technical analysis, which is worth looking out for. And if you want to learn our exclusive and unique method of trading in more detail, then the link's in the description box to join our Inner Circle mailing list. I look forward to seeing you on there. We've got some free gifts when you sign up. Guys, I appreciate you watching as always. Take care. I'll see you soon.